Good afternoon. It's terrific to be here today. I'm very honored to be speaking to such an accomplished group. I'm here to speak today as a customer. I don't have a lot of experience in outsourcing. We're relative novices in the game of offshoring and outsourcing. But I'm here to share with you a little bit about what we're trying to achieve and some perspectives on the U.S. healthcare market, which is an enormous market. It is big, it's complicated. This is the a partial list of the United Health Group family of companies, and I think we're kind of a microcosm for the market. We're in a tremendous number of businesses, and there are a tremendous number of aspects to the U.S. healthcare market. United Health Group is touches 50 million Americans, either directly or indirectly through the products and services that we provide. We're a $70 billion company. We're a Fortune 37, I believe, last year, and one of the most admired companies in healthcare in America. We've grown very, very rapidly. I think when I joined the company in 1996, we were roughly $7 billion market cap. So from 7 to 70 billion in the last 10 years, we've had a very, very good run. The U.S. healthcare space is fragmented, and it is full of opportunity. So I want to share with you today some of the opportunity that I see, and just share some of the perspectives of how we are going from good to great, the kinds of things that we're thinking about to satisfy, please our customers, and meet the needs of our constituencies. So I'm very pleased to be able to share this with you today. A little background just on how huge the market is. It is a $2 trillion market. It is going to be, by 2015, according to the federal government and the Kaiser Family Foundation, it is going to be a $4 trillion market. A very, very large market. There's a 7% compound annual growth rate projected. I have every expectation that that will, in fact, come to pass. We've seen that kind of growth for the last 20, 30 years in the U.S. healthcare market. And there's no reason to think that those trends are changing. I'll point out to one example there. There's some sort of shifting around in the market to where things are going. There are new products called consumer-directed health plans. These plans are a marriage of now financial services and health insurance products where you're taking a tax-free bank account, tax-free savings account, combined with a high-deductible health insurance plan and marrying these two things together. So you can kind of imagine some of the opportunities that creates in the IT space in terms of marrying two different industries together on a common platform, or at least an integrated platform. And by the way, that's expected to grow at a 21% compounded annual growth rate. And we are indeed, this is a 2005 study, we did indeed see that kind of growth in 2006. United Health Group leads the way in this area. We have 3 times the number of people in these types of accounts as our next, we have more people in these types of accounts than our next 3 competitors combined. So we are right out in front on that trend. There's a lot of stuff going on to make this trend somewhat locked in. There's a few slides here that are showing some of the dynamics of what's going on in the industry. One is America is aging, and as you age, you use more health care. So those two things are pretty much locked in. There's the baby boom generation, the big demographic bulge in the U.S. population is getting to be in their 50s, and some have just turned 65, the leading edge of that wave. And of course, the amount of health care you consume as you get older goes up, and it goes up substantially. The other thing that's going on is that the employer-based market is starting to disintegrate, especially at the lower end of the market. Small employers are being priced out of the market. Our products are becoming less affordable. So there's a real imperative to drive cost out of the system. And as those employers drop coverage, more and more people are coming into the individual health insurance market. And the individual health insurance market is the part of the market that I'm responsible for at United Health Group. So that's a market of currently 17 to 20 million Americans are in that market today. There's probably another 10 to 20 million Americans who are have enough income to participate but don't buy our policies or products for one reason or another. And again, affordability or perceived affordability is one of those primary reasons people are not purchasing those products. Some other environmental factors that we have in the market is that the U.S. workforce is nomadic. The average American will have 9 jobs in the course of their career, 9 different employers in the course of a career. So there's an emerging need for these consumer-directed products because they create a certain amount of portability. You're not as dependent on your employer for your health insurance. You can create a nest egg, a savings account of your own over time. So that's one of the things that's going on in the marketplace. Distribution models are changing rapidly. You heard Mr. Snowball yesterday say that in the UK, in the auto insurance market, the broker distribution that had almost the entire marketplace blew up overnight, and within a couple of years, 50% of the distribution was online. We're at the front edge of that wave in the health insurance market in the U.S. We're distributing a substantial amount of our business now through the web. The auto insurance industry in the U.S. is ahead of us, and you're seeing now even things like click, buy, drive as the tagline of one of the big online auto insurance companies. So we're going to that in the health insurance space. We just hope you're not driving directly to the hospital after you buy your health insurance. So, but it is an online world, and our consumers are not used to having 10-day, 20-day underwriting time cycles or any of that kind of nonsense. They're expecting instant results, and that's something that the industry is not ready to deliver. Our products are long life. Products that we wrote 30, 40 years ago are still on the books. So we have to be able to not only introduce new products into the system, but we have to maintain our ability to service the customers who have been with us all that time. So that's another complication in this space. That has led to an enormous amount of variation in the product set, which is another complication in the space. Then there's the aging of the IT workforce. The baby boom generation dominates the IT management in the U.S. They're approaching retirement. A lot of our legacy applications are COBOL-based mainframe applications, and we simply do not have the people in the pipeline to take these management and leadership positions going forward. Another huge opportunity. And finally, one more complexity which makes the need for having a dynamic partners to help us with our needs is the regulatory environment, which changes very rapidly and is also very complex. 50 states, 50 departments of insurance. On top of that, there's departments of health get involved in the game. There's a layer of federal regulation involved in the game. And then there are distinct regulatory regimes for various sectors of the market. So seniors are regulated different from low-income programs, which are regulated different from small group programs, from individual, and so forth. So it is an enormously complex space. It is a space where you need to be nimble. You need to have efficient ways to address the changes in the environment that are going on right now, and those changes are massive.